Hi, my name is Diego Mendez. I'm a bankruptcy, loan modification, and foreclosure lawyer here in Miami, Florida. I've been doing this type of law for about 13 years, and I've been doing this YouTube channel for a few months and getting a lot of subscribers and a lot of likes on my videos, and I would very much appreciate if you subscribe to my channel and like this video, obviously if you like it, because I'm going to keep doing these videos on forbearances, on real estate, on different aspects of the COVID-19 situation and beyond. So today what we're going to talk about are a mythical beast called foreclosure loans. There are people who are in foreclosure situations or people who are reaching the end of forbearance and they don't know what to do and the bank's not giving them options to save their home. I've been getting a lot of questions about these type of foreclosure loans, which are basically, the biggest question is, are they real? Is there such a thing as a foreclosure loan or a loan to get your house out of foreclosure and then get you in a situation where you might be paying? The answer to that question is yes, but it's complicated. I'm going to go through some of the more common ones and how you need to look at these things before you get yourself involved. Again, please subscribe and like my channel, and I'm going to keep making these videos for you and for everybody as we move forward into the end of COVID-19 financial nightmare. So like with so many things in life, the most important thing you need to realize with a foreclosure loan is that timing is everything. That depending on where you are in the process is what you qualify for. So I'm going to go through for people who are going through this situation, who are very early thinkers and who are trying to get out of that situation before it gets worse. Now, for the people who still have their credit, who still have an opportunity to refinance is the best option. This situation basically is where you ask another bank to basically give you a loan for the remaining amount of that you owe on your mortgage and basically starts the clock. The goal of this, more importantly than that, is to get a lower payment or a payment you can afford. Obviously there's closing costs and there's other costs involved in this, but this is the best option if you still have credit, then you need to think about doing this because this might be your way to get a lower payment and get your house out of foreclosure. Now, for the older folks in my audience, there's something called a reverse mortgage. Reverse mortgages are very complicated mortgage devices. Now, the biggest thing you have to understand is you have to be over 62 years old and you have to have significant equity in the property. You also can't owe the federal government unpaid taxes and some other stuff. But if you qualify for this, this is a great option. Reverse mortgage basically pays off what you owe on the mortgage and you basically don't have to make any mortgage payments. However, you still need to pay the taxes and the insurance moving forward and the HOA on the property, because if not, these things will end up in a foreclosure situation if you don't pay them. So for the older folks, people over 62, this is a great option. Call your bank, there's actually not your bank, but there's people that do this and you can get a reverse mortgage. Now, the last one, the one people always ask me about is the hard money loan. Now this has a very cool sounding name, but basically what it is are these are private investors. Sometimes it's an individual, sometimes a group of individuals who put together a certain amount of money and they give loans to anyone who has at least 35% equity in their property. Now the equity is determined by an appraiser, so they go and appraise your home and they determine how much equity you have, and that's how much money they'll give you. They'll give you 65%. Now, what happens in the situation is you take your 65% and hopefully that pays off your mortgage. What has to, or else they won't give you this loan. But let's assume that it does. You pay off your mortgage. Now, it gives you a break for about 2 years. You still need to make a payment, but the foreclosure is over. Okay, this will pull your house out of foreclosure. These things are called bridge loans, however. And the reason they're called bridge loans is because this is not a forever loan. This is not meant to keep your home long term. This is only meant to get your house out of foreclosure. Once you get the house out of foreclosure, then you're current. You need to work on your credit and move towards a refinance. You have 2 years to do it normally. In those 2 years, you need to figure out what to do with this property so you can keep it moving forward. Doing nothing is not an option. Most people wait the 2 years, and then the problem is that when you wait the 2 years, these hard money lenders will foreclose on your property, and there's very few defenses, actually no defenses in essence, and you will lose your property to these people. It is an unfortunate situation. Know what you're getting yourself into if you take one of these hard money loans out. They're out there. They're not always bad, but you need to plan what you're doing Don't just do it with no plan in place. You need to have a secondary plan to make sure that you get out of the hard money loan with your home. Again, my name is Diego Mendez. I've been doing this type of law for 13 years. I very much appreciate your likes and your subscriptions to my channel. I also like comments because that guides me as to what people are thinking about and gives me the opportunity to come up with ideas for these episodes of debt law, the survival guide for the desperate debtor. And moving forward, I will do the videos based on people's comments and people's opinions, and also what I see in the news and what I see in my own practice. Thank you very much. I very much hope that these videos help you come out of foreclosure and forbearance situations with your home and your sanity intact. Thank you very much.